Hello, I'm Wolf Blocksman, head crypto fashion consultant on Fed Fashion Network. Ooh. Now, today we are going to be talking about something that everyone wants to talk about at all times, and that is, of course, Bitcoin. Bitcoin.
So hot right now.
Ooh. Bitcoin is so hot right now, and it is just dominated in all of the other coins. It is going to be a hot season for the Bitcoin. Back to you, Elio Tradesman. Thank you very much, Wolf. I'm Elio Tradesmanson, and just as Wolf was trying to tell you, we have some seriously fashionable moments for Bitcoin ahead. The story starts a little something like this. Just a week ago, Panthera Capital, one of the oldest hedge funds in the cryptocurrency space, reported a 10,000% earnings since its inception back in 2013, 5 years ago today. Now, Panthera invests in a wide array of blockchain and cryptocurrency projects. So we would imagine that they have some pretty advanced techniques and get access to some pretty cool deals that probably the rest of us do not. Is this really an advantage, or have they really just kept pace with the cryptocurrency market in general? To find an answer to this, let's just go back and find out what the price of Bitcoin was in July of 2013. So here we are in CoinMarketCap, and you can see that at the beginning of July in 2013, the price of Bitcoin sort of crashed down here to the $65 range, and then it spiked all the way up by the end of July, sort of to the $100 range, or a little bit above that. But, let's just go ahead and assume that they bought sometime in the middle here. Let's just take an average between 65 and 100. It gives us something like 85, right? Let's just call it $85 for a coin, maybe even in the low 80s. Regardless of the exact price here, we can get a general understanding as to how much Bitcoin has grown since July of 2013 to July of 2018. Now, in July of 2018, the price of Bitcoin hovered between sort of 7,500 and even got above, towards the end of July, towards about 8,200 here. If we take the price, let's just call it 8K, and we know that Bitcoin has been much higher throughout the year, so there's plenty of times to have taken some profits, especially if you're a sophisticated trader. But let's just say they bought for, $85 and they sold for, $77.50 divided by 85 equals 91, right? 91.1. So we want to multiply that by 100. That gives us a percent, almost 9,200%, right? And to be honest, they could have sold and hedged and done a lot of things that would give them a much higher percentage. If they took profits of Bitcoin at $10,000, it would be way over that 10,000%. Or if they bought at, slightly less than the price that we're saying, it could be over. If they did OTC Bitcoin buys, they could have gotten bulk discounts. There's a lot of ways that they could have gotten their Bitcoin numbers from buys and sells or sort of appreciation value to be over this 9,200%. They're reporting over the exact same period that they had a 10,000% gain, which is, of course, if you're doing the math right, not even 10% over our rough estimation of the increase in Bitcoin value over the exact same time period. They could have simply just bought Bitcoin and held on to it, not even at special rates, not even at OTC bulk discount rates, but this could have just been normal market rate. They could have just bought Bitcoin and held on to it and made over 9,000% by an easy margin, and probably closer to that 10,000% mark and beyond. The real question here is buying anything other than Bitcoin even worthwhile? Is there any reason why you should even do this when Panthera, probably one of the more sophisticated investors in the space, is reporting about the exact same earnings as if you had just bought Bitcoin and held on to it? Well, I think this is part of the question that we have to understand and answer when trying to ascertain what's happening to the altcoin market. What's happening to the altcoin market, and what happened to the altcoin market, was largely a product of the swell in the Bitcoin market. Let me explain. So during November, we see that we were on a multi-year bull run throughout 2016, 2017. But during November, we saw that the price of Bitcoin went from about 8,000 to the, middle end of, not even the end of December, but December 20th or so. You're looking at December 19th, I believe, was the peak, or I guess it was the 17th, was when we got this $20,000 valuation. This incredible bull run here between November and December. And what do we talk about all the time with Bitcoin, at least on this channel, is use cases, utility. How can you actually use it? What can you actually buy with it? You could organize a house purchase, or you could buy a Lamborghini or something like that if you wanted to spend your Bitcoin. But a lot of people, especially savvy investors, don't really think like that. A Lamborghini depreciates the second you drive it off the lot. You lose a ton of money. So a lot of more savvy investors aren't just going to be buying Lambos here. So as you see Bitcoin sort of pull up to this $20,000 mark, you also see a corresponding hike in Bitcoin dominance. This was right about, December 7th was actually the highest Bitcoin dominance. December 7th, you see right here is this huge spike where you get an $18,000, almost $19,000 Bitcoin. That's what a lot of people, I think the savvy investors thought might have been the peak. So right about that December 7th time, you get this huge diversification that starts to happen into altcoins. And that's when you start seeing this real pullback. And over the next sort of 3 days, you see Bitcoin dominance go from 65% down to just 42%, right? Which is below where it is right now. And then by January 5th, you have Bitcoin dominance at the low 30%, right? From 65% of the market to 32% of the market in just a few days. So to understand exactly what that means is to show that as Bitcoin's price, but mind you, between December 7th and December 17th, Bitcoin's price there was a little pullback, but then it's rocketed back up to that $20,000 mark. And that's when you got all the FOMOing retail investors, the hodlers, people who had been in the industry for a while. They were actually diversifying out of their Bitcoin, either selling it, taking profits, or in this case, what we can see is investing in altcoins. So this huge surge that you saw between, in the late December, early January time, which saw a fall of Bitcoin dominance from 65% of the market down to the low 30% of the market, was really what happened. All that money went into the altcoins. And we can see this in altcoin chart after altcoin chart with just these incredible rocket rides up through the beginning of January, usually peaking out around January sort of 4th to, 15th, something like that. We see that these prices, especially in Bitcoin comparative, tend to be absolutely staggering in early January. Doesn't matter which chart you're on. You can click around almost any chart of almost any altcoins, and you'll see these incredible runs up in January. And I've just clicked through, Dogecoin, QDM, Basic Attention Token. Here's Tron. Tron was extremely severe here. You can see it. And this was all because the question is, what do you do with all of these gains on your Bitcoin? What do you do when you have so many gains and there's not really any intelligent way to store them? Obviously, you could tether, you could just hold on to it. But a lot of people who have Bitcoin gains understand the power in investing in a new cryptocurrency. And if you took, let's just say you invested at $1,000 and then you have $20,000, that would mean that you have 20 times your spending. So you could spend even a small percentage of that stack, 5%, 10%, 20%, and you would still be way in the money, and you would have diversified into all these new investments that were showing that they had the ability to rocket up. I mean, look at Tron. Tron went from 3 cents up to 30 cents. That's a 10x return, a 1,000% return in a matter of days. And therein lies the sort of myth. The myth that altcoins actually return a ton more money than Bitcoin. And I think it's not a myth, but it's something that you're only looking at half the equation. Because look, Tron fell right back down and it's about that 3 cent mark now. It's actually below it. So you can see that this rise was really only a reaction to the Bitcoin rise. And that's mostly the case that you're going to see echoed across almost all these altcoins that are now really suffering. And the question is, why are these altcoins so reliant on Bitcoin price? They have so much utility, so much promise, but really, do they have all that utility, or is this just expectation for the future? Just like Bitcoin, while it does an amazing job of holding value, it's still not a currency that's replacing the dollar. It still only has a few transactions per second. It's still not mainstream currency, right? And I still think a lot of people understand that Bitcoin is still working on its infrastructure for being what it's going to be in the future, which it can be both a store of value, like a digital gold, as well as a medium of exchange once we build up the Lightning Network, which we'll talk about in just a couple seconds. So the point I want to make here is that as you're looking back towards the mania of December and you're seeing this fall from Bitcoin dominance of 65%, and then you see it fall all the way down to the 30%, and people are wondering why things are so coupled with Bitcoin. Well, let's just take a look at the Basic Attention Token chart, and you can see that like most coins, almost all the volume of Basic Attention Token, which by the way is one of the more accepted altcoins. And you see the first exchange and the biggest market is almost 50% here on Bitcoin, the BAT Bitcoin chart. And then we have another one on Bittrex for 8%. Then we have an Ethereum market for 6%. But then we get back to the Bitcoin, another 6.5%. We have a Korean won market, and then we just keep adding little bits of, we have another Bitcoin market here for a couple percent. The point is we are looking at probably about 60 to 70% of this market being traded in Bitcoin. So when you have savvy investors that are initially investing Bitcoin, right? And these investors know, just like Panthera Capital know, that when they invested their money, that they could have just held Bitcoin and it would have gotten them almost the same returns. That as we're looking at this altcoin mania of things really going crazy and skewing down towards the sort of low ends of the Bitcoin dominant spectrum, that we know that a lot of these investors are still just looking to make returns and add up more Bitcoin. If I was willing to risk 0.1 Bitcoin for whatever that coin might have been, insert coin here, just because Bitcoin falls doesn't mean I'm willing to risk more of my Bitcoin for that coin. And many of you might be saying, well, I look at US dollar value, I look at US dollar value. Well, that's great, but for the avid traders, the real whales, the people who have been in this industry for a long time, understand that their base currency that they're looking at is actually Bitcoin. And for that reason, as Bitcoin's price falls, so does the amount of US dollars that they'll be willing to risk, or that's at least what it seems like, because in reality, they're looking at the markets from a Satoshi value, a Bitcoin comparative. So when you're looking at the markets and you're seeing that Bitcoin has been so dominant in being the wealth preserver, the wealth creator, and that it's clearly this rise in Bitcoin and the diversification into the alt from that Bitcoin that created this lack of Bitcoin dominance. It wasn't that all the alts started to show all this promise overnight. No, it was this insane bull run throughout November, December that led to people realizing that they needed to spend this Bitcoin somewhere, tether it up, take profits. That's what happened, was real savvy investors, which the vast majority of the money in the market is more savvy than the sort of retail newbies that come in. Obviously, the newbies, there are more of them in number, but they often hold so much less in Bitcoin per person that their actual sway in the market is way less, even though they might be very vocal. So the point of what I'm trying to say is that Bitcoin season, as we're starting to get zoomed in here on a new Bitcoin season, as we're up here at 47.95% in Bitcoin dominance. It's the highest it's been since Bitcoin's price on December 19th. On December 19th, over $18,000, and it actually piped back up to almost $19,000. So this was an extremely lucrative time for Bitcoin. Furthermore, almost all the big news in the space right now is surrounding Bitcoin ETFs, Starbucks and Microsoft teaming up to make a Bitcoin layer 2 network. Starbucks starting to help you transfer Bitcoin into dollars to be spent at Starbucks, and the Intercontinental Exchange, the operator of the New York Stock Exchange, opening their own Bitcoin trading markets and futures markets and many more products in the future. We're just seeing a huge collision of infrastructure and building and excitement around Bitcoin. Furthermore, just take a look at the Bitcoin Lightning Network's growth month over month. This is exponential growth. Initially, Lightning Network was breaking because big transactions weren't able to be passed around the nodes, and the more liquidity there is on the Lightning Network, the more it can hold bigger and bigger transactions. And so you can see that the transaction value, the channel value, has grown dramatically. And now this month, August, just look at that leap over July. We saw it sort of creep up from February, March, April, and that to me looks like an exponential curve upward. Now, some of you might be saying Elio trades, but that's not true. There's so much good news coming out of the altcoin market. And sure, that might be true, but let's just see what good effect good news has been having on even some of the best, most trusted altcoins. Take, for example, VeChain. On May 16th, we got the announcement from the VeChain Corporation that they were partnering with Bright Foods, which is a global company operating 93 different Chinese and domestic foreign subsidiaries with 4 publicly listed companies, in which is estimated to bring in 160 billion Chinese yuan, roughly 25.3 billion US dollars. Huge money, huge company, huge partnership. In my opinion, one of the biggest, if not the biggest, that VeChain has landed. Let's see what happened around May 16th. From May 15th to May 16th, we get a huge price drop off. And if you bought when you got the news that this partnership was being initiated around May 16th, since then, you've seen a complete staggering drop in price. It doesn't matter what partnerships they're coming with. It doesn't matter what their technology promises. All that matters is the correlation to the initial investment in Bitcoin and how much Bitcoin the real traditional, more savvy investors are willing to risk. So what's the point of what I'm trying to say here? Well, it's pretty simple. Until Bitcoin makes its next move, those altcoins that you love, those altcoins that you hope are gonna moon, and by the way, I still stick by all my reviews on these altcoins. However, my understanding of when they can possibly make their move, it's heavily reliant on the Bitcoin markets and the Bitcoin movements itself. Yes, there is so much promise in the space, but almost all of that promise was initially evidenced and shown by when Bitcoin made its move. So as Bitcoin gets ready for its next bull run, whether or not it's soon or late, and no matter how low Bitcoin goes, and like we said, we're expecting that it will test that 5K mark, even potentially below, it's more important to understand that as Bitcoin makes its next move, that's when the alts will actually show their true colors and start mooning or going up as well. But until Bitcoin makes its true move, these alts won't have the liquidity they need to go anywhere close to their previous values. And that's because their previous values, their previous highs, were dictated almost entirely by a swell in price action and liquidity in the Bitcoin network. But there is hope. The ETFs are coming. Lightning Network is moving along. We have partnerships with Microsoft, Starbucks, Amazon probably is coming soon. Who knows? The point is Bitcoin's moving forward. And as Bitcoin moves forward, this entire industry will be able to blossom. But until that day, and please don't kill the messenger, your altcoins are not going anywhere. And neither are mine. But to be honest, I'm not going to sell them. I'm not panicking. I'm not desperately rearranging my portfolio and tethering. I'm just waiting until Bitcoin makes its move. I'm accumulating some Bitcoin in the dip. And as Bitcoin makes its move, those alts will rise dramatically. And as you've seen, Panthera Capital has about the same amount of gains as if it had just held Bitcoin. So I'm going to rebalance my portfolio to be a little more Bitcoin heavy. I'd gotten pretty alt heavy in this late altcoin season. And to be honest, I think that might have been a little bit of an overzealous move. So I'm going to be getting a little bit back more into Bitcoin. At any rate, I hope this has helped you guys maybe understand a little bit better from my perspective, at least why these altcoins are not going to be moving. I don't see them going to zero. I see them as having some price floors, but those price floors would be probably more analogous to where things were back in November or early September of last year. If your coin's not that old, then it's a little harder to say. But at any rate, I don't see the dynamic growth coming into the altcoins until Bitcoin has its own bull run, allowing for the investors to diversify their assets, which still can't be bought and sold and used everywhere yet. It's still one of the best ways to spend your Bitcoin is to buy altcoins. So that will still be the case. That altcoin season will happen again. But will it happen as strong? Will it be as incredible? Will it be as moontastic as the last time? It's very hard to say. And that's why I'm very strict about the coins and the projects that I actually support, that I even review. If you hear about it on this channel, it's because I really like the coin and I think it has strong fundamental underpinnings. And that's what I believe will dictate the next altcoin season, is not just exciting projects, but strong fundamentals. If you enjoyed this video and you're not already subscribed to this channel, I encourage you to hit that subscribe button and don't forget to click that little bell notification so you're made aware whenever we put out new content. I'm Elio Trades, you're watching FUD TV, and I'll see you very, very soon on the next episode.